This is what happens when the world's largest supply chain snaps in half, and in this simulation, it happens at exactly 3:17 on a Tuesday morning Eastern Time when Chinese officials announce a complete embargo on all trade with the United States. No cargo ships, no containers, no electronics, no pharmaceuticals, nothing crosses the Pacific. And within 90 seconds of that announcement, the first automated trading algorithms begin selling US retail stocks because they've been programmed to recognize this exact pattern. You're about to see how your phone, your medication, your grocery store, and your bank account respond when 40% of America's physical goods stop moving. And we've built this simulation using historical embargo data, supply chain models, and logistics tracking from previous disruptions. But what happens in the first 72 hours isn't what most people expect, because the real collapse doesn't start in factories or at ports. It starts in a place most people never think about. And by the time you notice it, 3 separate systems will already be breaking. Every second of this simulation is based on actual supply velocity data, so listen closely, because the timing matters more than the event itself. In this simulation, we assume the announcement happens during US overnight hours, which means the first people who react aren't politicians or CEOs. They're night shift supervisors at Amazon fulfillment centers in Kentucky and Texas who receive automated alerts that their restocking schedules just failed, because the inventory management software has flagged 83,000 SKUs as no longer available for reorder. The items aren't gone yet. They're still on shelves, still in warehouses, but the system knows they can't be replaced. And that distinction creates the first psychological pressure point. Within 4 minutes, those supervisors begin forwarding the alerts up the chain, and by 3:24 a.m., the first logistics executives are awake and calling their counterparts at Walmart, Target, Best Buy, and CVS, not because they've confirmed anything yet, but because the software is faster than the news. At 3:31 a.m., the New York Stock Exchange pre-market trading session is still 2.5 hours away, but futures contracts for the S&P 500 begin declining, slowly at first, just 18 points, then 30, then 60, because algorithmic traders in Singapore and London have already priced in what this means for American retailers, and the models they use don't wait for human confirmation. By 3:45 a.m., the first cable news alert goes live, and the language is cautious, vague, still using words like reports suggest and unconfirmed sources, but the headline is enough to wake up 14 million people who have push notifications enabled, and a percentage of those people, roughly 11% based on behavioral data from previous crises, immediately open their banking apps or brokerage accounts, not to do anything yet, just to look, just to see the numbers, and that act of looking creates the second pressure point. At 4:02 a.m., the White House press secretary posts a statement confirming that the administration is aware of the situation and monitoring developments, which in diplomatic language means it's real, it's happening, and there's no immediate solution. And within 6 minutes of that post, the term China embargo is trending on every major social platform with over 2 million mentions. By 4:15 a.m., the narrative begins to split into 2 camps. One group believes this is temporary, a negotiation tactic, something that will resolve within days. And the other group is already calculating what they personally own that was made in China. And that second group starts making lists, mentally at first, then on paper, then in spreadsheets, shared in private Discord servers and neighborhood group chats. The interesting part is that both groups are wrong about what matters most, because the real vulnerability isn't in finished products. It's in the components that make everything else work, and most people won't realize that until day 3. At 4:30 a.m., the first panic buying begins, but it's not widespread yet. It's localized to 3 cities, Seattle, San Francisco, and Austin, where early adopters and tech workers are statistically more likely to react quickly to global news, and the items they're buying aren't food or water. They're electronics, specifically laptops, tablets, phones, anything with semiconductors, because that demographic understands that 72% of the world's advanced chips pass through Taiwan, and if China is willing to embargo the US, the assumption is that Taiwan could be next, either by choice or by force. By 4:50 a.m., Best Buy's website traffic is up 300%, and their inventory system begins automatically limiting purchases of certain items to 2 per customer, a safeguard built in after the toilet paper shortages of 2020. But this time, the items being limited are different. USB cables, charging bricks, Bluetooth headphones, replacement screens, all the small things people forget are almost entirely manufactured in Shenzhen. At 5:08 a.m., the pharmaceutical industry has its first internal crisis call, because 70% of the active pharmaceutical ingredients in generic medications sold in the United States are produced in China, and while there's a strategic stockpile for some drugs, it covers less than 30 days for only the most critical medications, antibiotics, blood pressure pills, diabetes treatments, and the restocking cycle for those ingredients runs on a just-in-time model, meaning there's no 6-month buffer sitting in a warehouse somewhere. A senior VP at a major generic drug manufacturer sends an encrypted email to the FDA requesting guidance on rationing protocols, and that email, though not public, gets forwarded internally to 17 people within the first hour. And by 6 a.m., 3 of those people have quietly called their personal physicians to refill prescriptions early. At 5:43 a.m., the futures market for soybeans, corn, and wheat begins behaving strangely, not crashing, but twitching, because China is the largest importer of U.S. agricultural products, and if they're not buying, that's $41 billion in annual exports that suddenly have no destination. And while that doesn't affect the harvest itself, it affects the price, which affects the loans farmers took out to plant, which affects rural banks, which affects bond markets, and all of that starts moving before the sun comes up. By 6:15 a.m., rural commodity traders in Iowa and Nebraska are staring at screens that show price drops they haven't seen since the trade war in 2018. Except this time, there's no negotiation table, no tariff timetable, just a blank space where the buyer used to be. At 6:30 a.m., the New York Stock Exchange opens, and the Dow Jones drops 412 points in the first 90 seconds, then stabilizes briefly, then drops another 200, and the pattern repeats every 8 to 12 minutes because human traders are trying to find the floor, the point where the price accurately reflects the new reality, but nobody knows what that reality is yet. By 7 a.m., the volatility index, the VEX, is up 68%, and trading halts are triggered on 14 individual stocks, mostly in retail, electronics, and pharmaceuticals, because the circuit breakers are designed to pause trading when price swings exceed 10% in a 5-minute window, and that's happening faster than the system can process. At 7:22 a.m., the first grocery store runs out of a specific item, not food, but over-the-counter cold medicine, because a regional manager at a Walgreens in Ohio noticed that their distribution center only has 11 days of inventory for acetaminophen, and he made the decision to pull half of it off shelves and hold it in the back room, just in case. And when customers see half-empty shelves, they assume scarcity, and scarcity triggers buying, even if the buyer doesn't need the item right now. And that feedback loop, perception creating reality, begins to spread to other stores in the region by 8 a.m. At 8:35 a.m., the Department of Defense holds a classified briefing that includes a single slide showing U.S. military dependency on Chinese rare earth elements, which are critical for everything from fighter jet engines to missile guidance systems. And while the military has a stockpile, it's designed for a 6-month conflict, not an indefinite embargo. And the slide includes a red highlighted note that says domestic rare earth production would take 4 to 7 years to scale, which means if this lasts longer than 6 months, the Pentagon has to make choices about which weapon systems get priority. That briefing doesn't leak, but 3 people in the room independently begin moving personal investment portfolios out of defense contractors that rely on Chinese supply chains. By 9 a.m., the first factory in the United States shuts down, not because it's out of materials yet, but because the CEO decides it's not worth running a production line if the components needed for next month's output are stuck on the other side of the Pacific. And shutting down now preserves cash flow and prevents the company from building inventory it can't complete. It's a textile plant in North Carolina that makes high-end outdoor gear, and the shutdown affects 214 employees who are told to go home and wait for updates. And those employees, over the next 3 hours, will tell an average of 11 people each about what happened. And that word of mouth creates a radius of anxiety that spreads faster than any news broadcast. At 9:40 a.m., the president addresses the nation from the Oval Office. And the speech is careful, measured, designed to project calm, but one phrase stands out. We are exploring all available options, which, in crisis communication language, means there is no immediate plan, and the markets react accordingly. Another 200-point drop in the first 5 minutes after the speech ends. By 10:15 a.m., consumer confidence polls show a 14-point drop, which historically correlates with a 9% reduction in discretionary spending over the next 30 days. And discretionary spending is 70% of the U.S. economy, so that 14-point drop begins a cascade that won't fully materialize for weeks. But the psychology of it, the decision to not buy the new couch, to not book the vacation, to not replace the laptop, that starts now. At 11:03 a.m., a mid-sized hospital in Virginia sends an internal memo to department heads, asking them to audit their current supply of Chinese-manufactured medical devices, specifically ventilators, IV pumps, and patient monitoring systems. Because if something breaks and the replacement part is stuck in Guangzhou, the hospital needs to know which units can be cannibalized for parts and which patients get prioritized. The memo is marked internal only, but a nurse takes a photo of it and posts it to a private Facebook group for healthcare workers. And within 2 hours, it's been shared 41 times, and the comments are all variations of the same question. Is your hospital doing this too? By noon, the stock market has lost 970 points, and the talking heads on financial news are using the word uncertainty in every sentence, Because uncertainty is the only honest description, nobody knows if this lasts a week or a year. Nobody knows if it's political posturing or the start of a longer decoupling. And in the absence of certainty, the market prices in the worst case, which means more selling, which means more price drops, which means more fear. At 1:30 p.m., a software engineer in San Francisco opens his laptop and realizes that the app he's been building for the last 8 months relies on a cloud server architecture hosted by a Chinese company. And if the embargo extends to digital services, which hasn't been clarified yet, his entire project could go offline and he's not alone. An estimated 18,000 US-based apps and platforms use Chinese back-end infrastructure, and none of them received advance warning. By 2 p.m., GitHub is flooded with posts asking if there are contingency plans, and the answer, for most, is no. At 3 p.m., the first shipment that was already in transit, a container vessel that left Shanghai 4 days ago carrying electronics components, receives orders to divert to Vancouver instead of Los Angeles, and the captain makes the turn, and that decision means the components, which were destined for assembly plants in California, will now sit in a Canadian port waiting for legal clarity on whether they can be forwarded, and every day they sit is a day that assembly lines in 3 states sit idle. At 4:20 p.m., a Bloomberg terminal shows that overnight lending rates between banks have increased by 30 basis points. A small move, barely noticeable, but it signals that banks are becoming slightly less willing to lend to each other, which means they're pricing in risk, which means they expect defaults. And defaults mean job losses, and job losses mean mortgage failures. And all of that is still weeks away. But the pricing mechanism, the interest rate, that adjusts in real time. By 5 p.m., the Dow closes down 1,218 points, the largest single-day drop in 14 months. And the news coverage shifts from what happened to what happens next. But nobody has an answer. Because this scenario, a full trade embargo between the world's 2 largest economies, hasn't happened in modern history. There's no playbook, no model, no historical parallel that matches the scale. At 6:30 p.m., a family in Ohio sits down for dinner, and the father mentions that his company, which manufactures industrial equipment, is going to have a hard time sourcing parts. And the mother mentions that her pharmacy said they might have trouble restocking her blood pressure medication. And their teenage son mentions that his friends are talking about whether the new phone release will even happen, and none of them connect these 3 things into a single pattern. Because the collapse doesn't announce itself. It just slowly becomes the texture of daily life. At 8 p.m., a policy analyst in Washington finishes a report that won't be published for 3 days, but the conclusion is stark. If the embargo lasts 60 days, GDP contracts by 1.2%. If it lasts 6 months, GDP contracts by 4.7%. And if it lasts a year, the model breaks, because the variables become too dependent on human behavior, on panic, on adaptation, on whether people hoard or share, on whether companies cooperate or compete. And those things can't be modeled, only observed. At 9:45 p.m., a warehouse worker in Tennessee finishes his shift and notices that the loading docks, which are usually full of trucks waiting to be loaded, are half empty. And his supervisor, when asked, just shrugs and says they're adjusting schedules. But the worker knows what that means. It means there's less to move, which means less work, which means fewer hours, and he doesn't say anything. But he starts thinking about his rent, which is due in 12 days. By midnight, 16 hours after the embargo was announced, the immediate shock has passed. The markets are closed, the news cycle is repeating the same information, and most people are asleep. But beneath the surface, 3 separate systems are recalibrating. Inventory algorithms are adjusting reorder points, credit models are repricing risk, and logistics networks are rerouting shipments. And all of that happens silently, automatically, without anyone making a conscious decision, because the systems were built to respond faster than humans can think. On day 2, the shortages aren't widespread yet, but the awareness of them is, because social media is flooded with photos of empty shelves, and even though most of those photos are from isolated incidents, the cumulative effect is a belief that scarcity is everywhere, and belief shapes behavior, and behavior creates reality. By day 3, the first layoffs are announced, not in manufacturing, but in logistics, because if goods aren't moving, the people who move them aren't needed, and those layoffs ripple outward, because those workers stop spending, and the places they stop spending cut hours, and the cycle tightens. By day 7, the word rationing appears in a press briefing for the first time, not as a policy, but as a contingency. And the distinction doesn't matter, because once the word is spoken, people begin rationing on their own, buying less, saving more, preparing for a future that feels uncertain in a way it hasn't felt in years. By day 14, the initial panic has faded, replaced by a kind of low-grade tension, a constant background hum of worry that doesn't spike, but never fully goes away. And people adjust. They find substitutes. They make do. They change routines, and life continues. But it's different, smaller, more cautious. And the question everyone is asking, quietly in the back of their mind, is how long this version of normal can last. The simulation doesn't end with a resolution. Because in the real models, there isn't one. There's only adaptation. And adaptation takes years, not weeks, and the cost of it, the jobs that don't come back, the companies that close, the medications that get replaced with less effective alternatives, that cost is distributed so widely that no single person sees the whole picture. They only see their part, and their part feels manageable, survivable, until you add up all the parts and realize the shape of what's been lost. If a moment like this ever reached where you live, how long would it take before you noticed something had changed?